Well, we have the silver pumpers and we got the Fiat paper pump and dumpers on the opposite end of the spectrum. I just want to get into something why Fiat paper. I know, obviously, if I walk into any store right now with $20 notes, they buy me physical goods. That's quite reality. And the price of silver denominated in those fiat notes has been dropping. Yes, I know that, but I'm going to say this. During the Obama administration's second term, we're going to see some real financial calamities coming up, and the price of silver and gold is going to go right through the roof. I also want to mention this early. You're not going to see too many people pushing palladium because it's not worth it. They're not going to be able to get a lot of people into palladium, but I'll probably get on that with another video. But that's going to actually be a good investment, and it got real value. But let's see how this Fiat pump and dump game goes. Well, it's going to be pretty obvious because like what's going on now with the Bank of Japan, they're going into uncharted territory. They're going into like a super duper QE. They're going to buy everything up. But just look, how did assets get in trouble in the first place? Loans were made, correct, for real estate ventures. Basically, it was the housing and real estate industry, which is well over 50% of the economy. Basically, it really is. When you start saying all the correlated industries and everything that's around the real estate and construction industry, it's over 50% of the economy. So they lent money. But these are long-term loans. Not everything's going under right away. But they lent money at what cost? Nothing. Basically, when money comes into creation, it comes into creation in the form of a loan, and it goes out to other banks, and then it becomes an asset on their balance sheet, and then they get lent out, and it doesn't cost them anything, but it does get paid back in interest. So what is the Federal Reserve doing with QE? They're buying up troubled assets. They're exchanging one paper for a title to something that's real. They're telling these banks that they will have treasury notes. They're buying them up. They're going to hold the treasuries on their balance sheets, and in turn, these banks will relinquish their troubled assets, quote unquote, to the Federal Reserve, and it'll go on their balance sheets. It could be REITs, real estate investment trusts, or whatever it is, mortgage-backed securities. It could be anything. But the thing is, when the Federal Reserve gets this troubled asset, it's called a troubled asset because it has a value that's way too high. But they own it now. They actually have real property. And what did it cost them to get that real property? Shit paper. So what do you think is going to happen to the holders of shit paper on an individual basis long term? Same deal. Shit paper, US dollars, is about, maybe it's a little, I don't want to knock it too much because in reality it is backed by oil in some ways and the full faith and credit of the U.S. government and the economy. There's a lot of stuff they could do to hold it up a lot longer, and it may not go to, I don't think it's going to go to oblivion. But you have to remember, when the Federal Reserve buys quote unquote troubled assets, what they're doing is they're buying real assets. It's not like the asset itself is falling apart or whatever the hell it is. It's still land. It's still a building. It's just that it's overvalued. And somebody got that money in the first place, obviously, whoever sold it. But what is it costing the Federal Reserve to get this asset, this real land, this real building, this real tangible asset that you can knock on? What is it costing them? It's costing them paper treasury notes. Nothing. It's nothing because they create the money out of thin air. Basically, it comes in to being in the form of a loan. That's a great racket. I mean, I wish I could freaking create money out of thin air and buy up troubled assets to help shore up the economy someplace, and I actually have title to those real tangible assets. But quite obviously, the Federal Reserve is acquiring real tangible assets. They're not acquiring toilet paper and putting it in their vault to make more paper so they're safer. That's what the average schmo is doing who believes in a toilet paper system to excess. So that's definitely not going to work. It's quite obvious it's not going to happen. So when people go panic too much one way or the other, it's silver is basically a psychological metal. They don't call it a devil's metal for nothing because it screws with your head. But it is going to go way up. And the Obama administration is probably going to oversee one of the biggest financial calamities in the United States since the 30s. Or maybe even worse. I don't even know. I don't think the dollar is going to complete oblivion, though. But it's going to be greatly devalued. So, a lot of people are like holding on to fiat cash like that's going to be their safety. They're wrong. They're wrong. Some of the expectations of the silver pumpers are ridiculous, though. Because I don't think... See, in effect, our fiat cash may not be really... That's not a correct term. Because, in effect, it is backed by oil. And there's always something else they can do to shore it up. They can make it... they could say something else. They could restructure the way it is. They could say that it's backed by the oil and national resources of the United States that are contained within the borders of CONUS and of Alaska. And hey, it's got real tangible wealth then, doesn't it? That may happen. You think they couldn't do something like that? See, that's what may happen long term. And maybe that might be why you would see silver and gold after they really run up into very high amounts. It might come down later on after the commodity bubble plays its way out, which will be probably 2017 during the time of the end of the Obama administration. I can easily say the dollar is now backed by the natural resources that are being mined and pumped out of the earth in the United States. And like I said, when I looked at the Commodity Research Bureau's index, the biggest weighted factor in there is energy, which is oil and natural gas. So why can't you just say the dollar is backed by that? And, other, say, agriculture, maybe a little bit of gold and silver in the mix. But, fiat currency is actually a great... See, what the Federal Reserve is doing, and all these central banks are doing, is a very good scam. And just look at what they're doing. When they buy up troubled assets, they're not just buying up junk. They're buying the asset. They're buying the real... They own that asset. They have it. They have title to that land. And actually, what else are they doing besides that as far as precious metals? They are buying gold. When the central banks start unloading gold, they're going to load it on the open market. And, China's buying gold. See, everybody's buying gold, right? Actually, there is not enough gold out. I did a calculation. I'm just going to put this. I was going to make this very short, but I guess I'm not. But I did a calculation a while ago, just looking at how much oil is traded out there and how much gold is available in a year, like produced in a year. You would need oil, just to trade oil every year, it would have to be at $50,000 an ounce. See, I don't think they're going to be going to any kind of real gold monetary system anyway. So it just wouldn't work. But there may be a system where there's going to be a lot of commodities back into currencies. And in effect, in a way, our money, the U.S. dollar, is somewhat backed by oil anyway. Somewhat. They're playing all kinds of shrewd games. I know if a lot of countries said we're no longer accepting dollars for oil, well, that dollars would come back to the United States. But then again, every time that tried to happen, guess what? They got attacked. So, you don't really know. In the short term, the dollar is not going to fall apart. I can guarantee you that. But in the longer term, it's definitely going to get greatly devalued. And it's going to happen under the Obama administration. I'm thinking that's why they... I realize that elections are pretty much contrived in some ways. No matter who it was, I think the same powers control everything anyway. But, if you want to actually have a scapegoat, that's going to be the whole focus of the brunt of everything that's going to go on in this country in the next few years. Obama would be perfect, He'd be perfect because he's not connected to anybody. He's a purely Manchurian candidate and owned 100%, and he's just playing along with anything because that's his best ticket. That's how it goes with him. So, Romney, actually, if you think about it, if he was president and there was a lot of things going wrong in the country economically, He's probably got a lot more business strings that, it may not go as bad. It may not have gone as bad, but I think they're really going to pull the plug under Obama. So that means not like he's going to do it, but they're going to do it. They're going to do it. And that means that silver and gold is going to go way up. But just remember that when the Federal Reserve is doing QE, they're not buying some paper troubled assets. They're buying real assets. It's a freaking great game. It's a great game. And also, what are central banks doing? They're buying gold. At some point in time, I'd almost think that the central banks and all these are going to have to unload it someplace. And maybe when they do, it'll be on the open market. And that's maybe when the middle class is going to jump in here. Because, if you see gold going to 2,000, then it's 2,500, 3,000, it's going up. You're going to get a lot more people. That's usually when you get the people in there because they're convinced it's going up. You tell them all the fundamental reasons, and then the central banks maybe start lightening up their position on gold at very high. It's like I think the very wealthy are always going to win out. The middle class is always going to get shafted. Right now, the middle class is probably hanging on to Fiat toilet paper like it's dear for dear life. And they're wrong once again. They're wrong once again. But just see how that works. Hey, central banks buy real trouble assets, physical assets. They're troubled. They're in trouble because the loans are upside down. So they buy them. But they got something real, and what does it cost them? It costs them fiat treasury notes. So that's a great deal. I mean, it's a fantastic bargain for the central bank in the United States, the Federal Reserve. It's a fantastic bargain. So, anybody holding on to fiat cash, you realize that this whole system, that whole scam, the game they got going on, is going to blow up at one point in time. And I gave that example of the dam, and it's exactly what happens. The fiat money supply is building up like water behind a dam. It's like, how much is toilet paper is going to go on the balance sheets of all these banks before they start getting attempted to invest it someplace. And maybe some of it is trickling out into the stock markets and all that type of stuff. But it's going to start trickling out in other areas. And when they invest it someplace, they invest it in real assets, hard assets, which is usually associated with commodities, or commodities are associated with the production of those hard assets. So you can see how this game is going. Short term, fiat toilet paper keeps some, but long term, it's going to be toast.